Good morning, all. Camelback Trading 2724 coming to you this Wednesday morning, May 20th. We're looking at the last 2 days of the market profile of the SPY ETF here on Window Trader. And lo and behold, look where we're trading. So let's recap the last couple of days. Huge gap higher. Gap holds on news of a possible vaccine tested on 8 people. Wait a second. That news wasn't too good. Let's flush it out. Price probe on Monday, price probe on Tuesday, and look, here we are Wednesday morning. That's why I take the news and throw it out the window and trade what's in front of you. Price probes being regularly rejected, which never used to happen in the past, right? Monday's price probe, we opened down here. Last night's price probe, I said if this gets rejected, we're going to trade 11 wide. We're not even doing that. We're looking to trade above it, which would make it a downside destination. M period, I say I like to stay out of it because as mindless as these algos are all day, they get even more erratic in M period. If these last 2 days don't prove that to you, nothing will. Let's rip it up to open it down. Let's rip it down to open it up. Plain and simple. Be smarter than them. Okay, let's go over destinations and a game plan for this morning. So the first destination was going to be A's low, which was the price probe of 293.52. Right now, with just over an hour to go prior to the opening, we're above that by $2.50. So I'm going to say it's most likely getting rejected unless something drastic happens in the next hour. Then it was going to be the 11 wide. Now, I'll put it on both sides of the equation since we're not sure in the next hour if we come back to it. I wouldn't doubt that we do. 295.21, which was 11 wide. Then we have yesterday's high of 296.21. Monday's high of 296.75. And then above that, we have the vacuum up to 298.78. And then filling the gap at 300.01, 123-point gap from March 6th. And then we'd also be dealing with the 200-day moving average. And above that, there's more of a void. For the downside, we'll use 11 wide again because we're not sure which side we're going to open of it, above it or below it. 295.21. Then we don't have anything to yesterday's low of 291.95, which right now is $4 lower from where we're trading. All right? Talk about calling the S&P a penny stock, a Ponzi scheme, whatever you want to call it. Doesn't matter. We just trade what's in front of us. And then filling the gap down at 286.33, 562-point gap. Now, as of now, our pre-market high is 296.06, so right below yesterday's high. And my pre-market low is 293.38. So actually, that would be your first downside destination after the 11 wide if we open above that to the downside. Okay, so what's the game plan for this morning? Well, again, just about an hour to go. Yesterday, before whatever news or headline came out, it looked like in K period, we were attempting, right? Each new high was definitely fading back in, but it certainly looked like we were going to make an attempt, if not in K, in L and M, to try to take out Monday's high. Obviously, that didn't happen. Now we're back right at it. So a couple of things we can do. Right now we're looking in balance, in value. If in the next hour we gap higher, depending on the size of the gap, if we gap higher, you can take the call play out if the gap fills. Because odds are if you gap higher but below Monday's high, you're going to go get it. And then above that, there's a bit of a void, so we don't know if the algos, how much they want to seek their next level. That's one play. Second play is we open in balance, in value, bounce around here, trade down to the POC, but do not get into M period. Hold it, start going back up. Again, you could take a call play using POC again as you're out to see if we take out yesterday's high and then Monday's high. On the flip side, if we're open up here in balance, in value, but cannot take out yesterday's high, and then you could take a put play. I'd be out if you get above yesterday's high. If you don't get above yesterday's high, you should at least then migrate again to that POC. 11 out of 13 is very powerful. So unless you're going to get an opening drive of some sort, the odds of trading back to it are pretty good. Again, these are couple of early plays. They're in balance, in value, the worst of your risk reward. In my trading room, you'll know up to the date at 9:30 and all day what I'm looking to do. But those are 2 early ones for now. Remember, I said M period, the day that it trades is so erratic I want to stay out of it. But it's pretty important a lot of times the following day. Well, again, that holds true. Now, this is 2 days ago, but right now we're in the middle of this M period. So the key is, what are the algorithms going to do, right? If they take out yesterday's high, they're going to go trade to the top of it and take out that previous day's high. If we can't take out yesterday's high, or we fail above it, well, there's a good chance you're going to trade down that M period, take out the 11 wide, and then see what we get below that. What buyers do not want to see is to get accepted into yesterday's M range. Remember, these are mindless machines we're going against. So once you get accepted into them, what are they going to do? They're going to program themselves to certain areas, which is yesterday's A's low and then the day's low. There's no rhyme or reason. It has nothing to do with earnings. It has nothing to do with the market itself. So if you keep that in mind, you'll do fine against them. Okay, so those are the destinations and the game plan for early. Let's go to the charts. So remember, 294.88, that's last month's high. On Monday we closed above it. On Tuesday we closed below it. Right now, Wednesday, we're above it by $1. Again, in and out of an inside month, at some point you'd like to get some direction. Do we stay above it and get acceleration, or do we just get accepted back into it? 2 weeks, less than 2 weeks left to go in the month. It might take that long to figure it out, to see if it's successful. However, it is in balance for now, and we're above the 11-year trend line. Weekly, same thing, right? We got above this 3-week balance, got back into it yesterday. They're trying to stay above it today. You want to get distance away from previous highs to show that the trend is still kind of young and you still have legs to it. The less distance you get, the more the odds favor coming back into balance. And that 287 level. And then yesterday, like I said yesterday, what's the bull's goal? To stay inside yesterday's range, to get yesterday's high and Monday's high, to continue their assault for this gap and the 200-day moving average. The bear's goal was to now make another low and start chipping away at this huge gap and get accepted back into this huge balance. Well, right now, with an hour to go prior to the opening, the bulls are trying to do what they want to do. All remains to be seen. Good luck trading today. Have a great day. Come check us out at camelbacktrading.org, and we'll recap the day at 4 p.m.